It's morning again in America, and the Dow Jones is still in a downtrend, guys. Look at here. You guys see this downtrend line? We have three touches. We're going to get straight into it this morning. Three touches. February 19th high, March 3rd high, March 26th high. Okay, so that's three touches. Yesterday, well, the day before yesterday, Wednesday, Dow Jones rejected for the third time, and it ran right into the 200 daily moving average yesterday as a support. It's quite simple what needs to happen from here, okay? As usual, Uncle Chart is going to give you guys the bull case and the bear case. Let's start off with the bull case this morning. Now, usually when a resistance level hits initially, there will be some type of rejection. The question is, will that rejection lead to more downside and continue the trend? Or will it put in a higher low that'll lead to the eventual breakout of the downtrend? Okay. I believe that question will be answered either today or Monday, preferably today. Okay. So bull case scenario first. If Dow Jones, if the market makers plan to make the bears cry today, then what they need to do is clear resistance levels as usual, starting with 423, 425, and to break out this downtrend line, they need to get above 427. All right, those are resistance levels: 423, 425, and 427. And they also need to stay above the 200 daily moving average, which is sloping up a little bit, currently around 421.4ish. Those are the levels to watch. As far as the bull case goes, if those levels clear, just like how I show you guys on the 15-minute chart for SPY, okay, or it works for any ticker symbol. If it clears, and especially above 427, there is a great chance that we are bullish again, and a bottom is possibly in for the Dow Jones. We lost the 200 daily moving average. We recaptured the 200 daily moving average. That's a false breakdown setup. And we also back tested it as support, turning it back into a support. Bullish price action behavior, but it will need follow through. And bullish price action follow through would be to clear those resistant levels, preferably today or Monday latest, and put that bottom in. Okay, bounce off the 200 daily moving average, clear the downtrend line, and we are bullish. We're good to go if you are a bull. Okay, that's the bull case. Bear case scenario is that now that we had the third test, if Dow Jones decide to go for another test, obviously those resistant levels must hold. But if you want bearish follow through, that 200 daily moving average must fail as support. You guys can see 200 daily moving average is that reddish purplish line. I don't even know that color. Is that magenta? Either way, you guys can see how Dow Jones bounced off of it. You guys see the wick kissing that moving average. So today they'll need to break it down. Break down 421.4, and that will put 420, the fifth level at 418.5, and 417 or lower in play. Okay? We're still overall bearish because we're below the 50 daily moving average, and we are on a downtrend line. Okay? But if we break down that 200 daily moving average, that is the bearish follow through you want to see. We do have a gap around 419.5ish as well, but I think we'll break through that gap. Okay? Here is IWM. Yes, guys, it broke down the 20 daily moving average yesterday. We had the death cross of the 50 and the 200 not too long ago. We tried to recapture the 20 daily moving average March 24th earlier this week. Back tested as a support on Wednesday, but yesterday it failed to show buying pressure and pushing IWM higher. Okay, so for me, the plan today is stay bearish below 205.6. That's the equilibrium level for today. If we could stay below 205.6, Uncle Charles will remain bearish. Next target is at 203.6. That held as support yesterday. But if bears can break it down today, 202, 200.8, 199, and 197 plus are in play. All right, 197 negative, I should say, minus. All right, so if we are going to get a bounce, I need to see that false breakdown setup. All right, I need to see the bears get tricked out and resistant levels or lost levels get recaptured. For me, that is 205.6. If it recaptures, that recaptures the fib level and it recaptures the 20 daily moving average. That's your sign to go bullish. 207.5, 210 or higher would be in play. Okay, guys, here is Apple consolidating. I got the chop range 221.5 up to 225 with 223 as the middle level. If we are going to be bullish today, 223 and 225 both must clear. 227 and 228.6 would be in play. Should be able to back test that 200 daily moving average at the very least, but above it would be more bullish, obviously. Okay, now if we are going to get bearish, stay below 223, break down that fib level. I have a fib level at 221.5, but the 5 daily moving average is also around that. You guys know how I feel about the 5 daily moving average. It's a great moving average for short-term trading. So if we're going to be bearish, you guys know seeing price below the 5 daily moving average is a good sign. So Apple needs to break below 221.5 to put 220, 218, and 216.6 in play. I think we can go lower if we break down support. Here is Amazon. Amazon, I still lingering around the 200 daily moving average. I see some buying pressure, but it needs to be strong enough to start clearing resistance levels. For me, that is 201.5, 203, and 206. I would definitely get bullish if 201.5, 203, and 206 can clear as resistant. For me to get bearish or more bearish, I need to see that 200 daily moving average fail. And that 200 daily moving average is actually around the 200 level. So break down 200 and we could head down a lot lower. Down, fill that gap maybe around 196. I do have a fib low around 195.5. And we possibly get a lot lower down to 192 in the 190 area. All right, here is Microsoft bouncing off that little uptrend line. It's still flagging here. If we are going to get a bounce, really get a bounce going, 390 and 392 must clear to put 395 and 396.3 or higher in play. If Microsoft can break down 387.5 today, it breaks down that trend line and it breaks down a fib level, which would put much lower targets in play. We could get that next leg down, 381, maybe all the way down to 377 and 373 area. Big possibility if we break down this trend line. Here is Meta. Meta looking bullish, but we got to be careful and be ready for any case scenario because you never know what could happen. But overall looking bearish as of now, rejecting from the 20 daily moving average as resistant. Okay, if there is bearish follow through, price needs to stay below 603.5 and 602. Break down 600 to put 597, 595.4 or lower in play. Trust no bounce unless 602 and 603.5 can clear. That would put 605, 609, and possibly all the way back up to 615 in play. Above 615, I would definitely be bullish. That would be a recapture of a fib level and the 20 daily moving average. All right, guys, thank you guys so much for watching. It is Friday. Take it light today, but finish strong, okay? I love you guys. Peace.